As we stand on the brink of 2024, a cloud of economic uncertainty hovers over us. Will the U.S. face a recession? Opinions are split, but let's dissect this with precision on Wealth Builder's Wisdom. Renowned market strategist Jeffrey Goloch has been vocal about his concerns. In recent interviews, he's painted a rather stark picture, one that suggests a looming recession, with the second quarter of 2024 being a critical time. Picture this: U.S. debt interest expenses skyrocketing, an economy potentially spiraling into recession. It's a scenario that demands our attention.
But Goloch's insights don't stop there. He anticipates a unique post-recession twist: interest rates dropping initially, then surging unexpectedly due to fiscal complications and inflationary pressures. This rollercoaster of economic events is something every investor should be wary of. Now, let's shift our gaze to the tech giants: Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla. These titans have been the pillars of the S&P 500 in 2023, but Goloch warns of their vulnerability in an economic downturn. His advice? Tread carefully. In today's episode of Wealth Builder's Wisdom, we're exploring two alternative investments that align with Goloch's predictions and show promise amidst these economic headwinds. Both have seen significant dips from their peaks, plunging by at least 75%, but hold the potential for a strong rebound in 2024. First up, UiPath Inc., a leader in automation, has been making waves with its financial performance. In the third quarter of fiscal 2024, they reported a remarkable 24% year-over-year revenue increase, hitting $326 million. Their annual recurring revenue also impressively grew by 24% to $1.37 billion. UiPath's strategy? A focused, land and expand approach, targeting enterprise customers and achieving dollar-based net retention rates over 120%. They've also ventured into new territories and formed key partnerships, like with SAP and T-Systems in Europe, further cementing their market position. UiPath isn't just following trends, it's setting them. By integrating AI with automation, they're tapping into unprecedented efficiency and expanding their total addressable market. Looking ahead, UiPath's financial forecasts are just as promising, with revenue and our expectations indicating continued growth and innovation. This company isn't just an investment option. It's a testament to future-ready business acumen. Before we delve into our next pick, a quick reminder: if you're finding this video insightful, consider subscribing to Wealth Builder's Wisdom. We bring you the latest and most strategic investment insights regularly. Next, let's talk about PayPal Holdings Inc. In the competitive digital payments landscape, PayPal stands out with its innovative technology platform, facilitating transactions in over 200 markets and 150 currencies. Their growth story is impressive: an active user base consistently scaling new heights and a focus on monetizing each user to unprecedented levels. Venmo, a key player in their portfolio, has become a household name, surpassing competitors in payment volume. PayPal's recent financials are a testament to their strength: a total payment volume of $388 billion and expected non-GAAP EPS growth of about 21%. While some might perceive a plateau in their growth curve, PayPal is strategically positioned for the next phase of monetization and innovation. Their balance sheet is robust, signaling a company ready to withstand economic fluctuations. Their ecosystem, comprising Braintree, Venmo, Zoom, Zelle, and Honey, transcends geographic and demographic boundaries. With their recent acquisition of Zelle, a point-of-sale solution provider, PayPal is poised to dominate an already vast market. As we conclude, remember, in a world of economic uncertainties, being informed and strategic with your investments is crucial. Wealth Builder's Wisdom is here to guide you through these challenging times. If you enjoyed this video, please like and subscribe for more insightful content on smart investing and financial growth. Now, it's crucial to understand the broader context in which these companies operate. Let's dive deeper into the economic landscape of 2024. We're witnessing a dynamic shift in global markets, influenced by geopolitical tensions, technological advancements, and evolving consumer behaviors. These factors are reshaping investment strategies, and understanding them is key to making informed decisions. In this segment, we're going to analyze the impact of these global trends on our investment choices. First, let's talk about the geopolitical landscape. Trade wars, international relations, and regulatory changes play a significant role in shaping market dynamics. For instance, consider how changes in trade policies between major economies like the US, China, and the EU could affect multinational companies. These shifts can lead to fluctuations in supply chains, impacting companies' bottom lines and, consequently, their stock prices. Next, technological advancements are revolutionizing industries. From AI to green energy, the companies that are at the forefront of these innovations are likely to outperform their peers. For instance, consider the impact of electric vehicles, EVs, on the automotive industry. Companies that have successfully integrated EV technology are seeing a surge in investor interest. Similarly, AI and machine learning are transforming industries like healthcare, finance, and retail, creating new investment opportunities. Consumer behavior is another critical factor. The post-pandemic world has seen a shift in how consumers interact with technology, prioritize health, and make purchasing decisions. Companies that are quick to adapt to these changes, whether it's through e-commerce, telehealth, or sustainable products, are positioned for growth. Now, let's explore some specific sectors and companies that are well placed in the 2024 market landscape. Renewable energy is one such sector. As the world moves towards sustainability, companies in solar, wind, and battery technology are gaining traction. Consider investing in firms that are leading in renewable energy technology or those with significant investments in sustainable practices. In the tech sector, look beyond the giants. Explore emerging companies in areas like cybersecurity, cloud computing, and fintech. These sectors are growing rapidly, and companies that offer innovative solutions are likely to see significant growth. Healthcare is another promising area, especially with the ongoing advancements in biotechnology and telemedicine.
Money's Health X Forum. Thank you. Can you tell me why you decided to attend today's forum? Well, the UK has always been a hotbed of amazing technology, especially in the biotech space, with Oxford and Cambridge, and some of the biotech companies that came out. And being based here in London, I feel it's a bit my duty to help the companies here in the UK and access capital in addition to those clients that I have on the continent. Great. And can you tell me, from Jeffrey's point of view, where you see the biggest opportunity for the sector in the next 12 months? The biggest opportunity for the sector in the next 12 months is really to capitalize on a lot of the money that's been raised over the last several years. All of that money has gone to fund clinical development. And over the next, I'd say 12 to 18 months, you're going to continue to see a lot of these companies hopefully hit on the milestones that they promised to raise money on. As they continue to do better and continue to grow in value, that's going to feed the fuel for the next set of innovation to come forward, and it's all about making a difference in medicine. So it's a pretty exciting time. Okay, right. And this is a forum for CEOs of life science companies, and in your job at Jefferies, I'll just say you deal with a lot of CEOs. What in your mind is the biggest challenge that they face? The biggest challenge for CEOs is managing their time, raising capital, and funding their balance sheet to be able to run the clinical trials that they need and push their companies forward requires a significant amount of engagement with investors. And many of my clients spend up to 30% of their time speaking with investors.
The world of investing is ever evolving, and staying ahead requires an unquenchable thirst for knowledge. At Wealth Builders Wisdom, we are committed to being your partner in this journey, providing insights and analysis to help you navigate the complexities of the financial world. Thank you for joining us today. If you've enjoyed this video and found it informative, please show your support by liking and subscribing. Your engagement helps us grow and continue providing valuable content. And remember, for more in-depth discussions and exclusive insights, consider joining our community on Patreon. We look forward to seeing you in the next episode, where we'll explore more strategies, analyze emerging market trends, and continue our collective journey towards financial empowerment. Until then, keep building your wealth with wisdom and confidence.